Here we are gathered this very fine Friday morning on 11/18 of 2011, my friends and MMTs. The time is 5:53 a.m. Pacific Standard Time, that is. Gap open on the NASDAQ. Pre-market futures live. More importantly is, not only are they live, but there will be trade management within price action volatility. How you make a market between the public and then come out ahead. And what all of those techniques are and what the headline data is, that right now in the pre-market, we've had the S&Ps up 9.2. They were up a lot more than that earlier on. The NASDAQ comp is at 13.8. It was up at 18. However, let us not forget that in the early hours of pre-market futures, why things were going on in Italy and Germany and France, there were other things that were happening. Those futures were only up 0.75. Throughout the morning, the futures have leveraged up in the price as they have. That's that part of it. Now, on the opening bell is, because there's been liquidation again in the capital markets around the world, capital markets in the U.S., there has been a liquidation, and that liquidation comes from various different clearinghouse and firms, which means that the exchange model has less volume, because once the liquidation goes through its phase, that money and those firms that had to liquidate, well, they're no longer in the market, which was a contributing factor now to our overall pre-market futures and regular stock hours. Google 2.38 ratio. Stocks got slammed yesterday. The FXE is a major thing here. The currency shares, Euro, trust Euro. When that closed down yesterday and it made its highs and that reversed and went down, the broader market and equity prices did what? Sold short to make money. Yes, they did. And because there was liquidation in the gold market, the silver market, there was also liquidation, hedge fund managers. Oil market has been out of control. Copper was sold down yesterday. Lots of things were sold down. What I would like to tell you is that when this here sells off, the FXE, then these gaps are going to fade back. Some of them are earnings related. You know, the Google got sold down yesterday. Its trend still in play. That 605 call that we're going to be talking about. Right now, gap open up is this list right here. You got all the ones that we make markets on right here, right now. Now, what you would be looking for is on the gap volatility, the price volatility, is that here's what must follow. This must stay strong, and it must keep making higher highs, and or this must consolidate at higher MMT teeny consolidation price levels. Should that be the case, then the current equity bid, and what is an equity bid? An equity bid is this: the bid and the ask between the public, and that is your price. The most important thing in this particular type of market, after being sold down extremely hard yesterday, when this was getting sold down, there is news out around the world that the ECB is going to do this, or this bank's going to do that. And when your Chinese markets were still down. The FTSE is still negative. The FTSE 100 is by 29 handles right now as we speak. The CAC, it's up 7. It was negative earlier. Our S&P futures are holding right at about 1224. The Dow futures up 83 handles at 11,822, up 0.71%. NASDAQ futures climbing back up to 14, up 0.62%. Gold, on the other hand, that got liquidated, and the hedge fund managers were liquidating that one. That one is up slightly today. And so were some of the other commodity markets. The sell down in commodity markets were liquidation processes. Once the liquidation is over, look for continuing higher inflationary costs that will come back in those markets, as it will. And that's the 2012. You can get that analysis directly from stockmarketfunding.com. info@stockmarketfunding.com will get you in contact should you need any economic analysis support. Watch the FXE. NASDAQ pre-market, I've read the numbers. The calls are going to gap up in price. Google needs to run up toward that 607.50 and get above it. Right now, that closing price, it's all about what the bid is to the close. Almost a $3 ratio. So, the people that bought these calls yesterday on the 600, you're not doing too bad this morning. Right, MMTs?
That's right.
Huh? Who all owns them? Tell me now. We're live. Tell me who owns the 600.
I have a 600 and a couple 610s.
I do.
David.
All right. And what are your prices?
600, I'm in at $4.
Let's do one individual at a time.
600, I'm in at $4. The 610, I've got a couple of 95 pennies.
Oh, well, that's right up here.
Okay, David, I'm in at $3.90 on the 600. Right. I'm in at 85 cents on the 610.
All right. Next person.
I am at 600 at 340.
All right. That's on the low of the day. Previous day's closed. Okay.
I've got two of the 610s at 90 cents.
And why not the 600 down here at the 340 level?
I don't know.
Well, there has to be a reason for it. The people that are in the 605 calls, there was some that was bought. Where is MMT Tom? The thing that's going to be important is that FXE keeps climbing. Look at the $600 put. That's going to get marked down immediately. They were $6.70 on the high. They were low $1. They closed at $3.10. Look at the 610 put for today's expiration. It is options expiration, people. And these gaps fell. That means this side of the print pays. That's the end of the story. The people that own the 605 call, they need to limit those out on the opening bell because they got to try to mark them up. They need to limit those out at 3.60 on the opening print. What does that mean? If they open up at $4, well, then they got to give you a $4 print. They got to give you the highest print on the open. But that's going to guarantee a profit. There are some people who own these, and they need to be put out. Okay? There was also the bid and the ask. After I do the pre-market video, I'll give those out on the opening bell, which will be in 27 minutes. On the gap open down, MMTs, there isn't much of a gap open down. You can see that. So that's more of a bullish tone than a bearish tone. And once again, it's live, but so what? It's how you make good on a Friday options expiration. Bottom line. And here we are on the gap open up. It's on the NASDAQ comp. It's an options monthly expiration. They were marked down big yesterday. Last Friday, they did the same thing last Thursday and Friday with the worldwide event news. They marked this side of the market down and really marked that side of that put up yesterday to 670 on the highs and brought that stuff down over 100% on that 600 put. The thing about it is that 610 put, that was 2.75. They marked a high on that thing at 1380. And they did. So they're going to mark this side of the tape down of those positive gains here. They're going to mark that down. And on the flip side, they're going to come over here where my pointer is. They'll mark up to 605 depending on the minute that we get toward that opening bell. If they drop the bid down, then they're not going to mark them up. They're going to mark the bid down. And I will give a limit order. I'm still going to keep a limit order. If they mark this bid down, I'm going to put out limit orders right now on that 605 call at 40 cents. Yeah. 10 of them. 10. X. On the opening bell. You never know. They walk away from the bid. I catch 10 of them at 40 cents. And they rock this thing off support. And the brain confirms it. And we're off to making higher highs all day versus lower lows. Yesterday, the equity had lower low sequence in the highs and lows. We would be looking for a series of higher highs. Remember, there has been some margin debt selling in the broader indexes. And that information is more than valuable. And what we want to do, the way that you work a limit order out is if it's out there at a certain price, but they open it at a higher price, they have to legally give you the higher print. Now, the thing about it is, we've had light volume, 2,800 shares. I could control that market real easy. All I have to do is sell below that bid and create a panic and run the stock down. That's how they do these high beta stocks in the bid and ask. Keep that limit order out here at 40 cents on the opening bell on that 605. On that $600 call, we have to have a limit out structure. We would mark that call up. Yesterday's high was $12. They marked them down $7.90. They marked this down $5.85. What we're going to want to do is put a limit order out, live limit order out to sell. If they mark this back up above 605 on the open, then these contracts will hit 650, a $2 markup from here. And this one, well, it's got to go $1.70 in a markup. So the bid and the ask have got to get between 350 and 370 on this markup on the 605 call. And here are your gap. Price line leading the way. It was sold down yesterday. You've got some retailers in here that are doing good. This old Blue Coat Systems, BCSI, shorts have been on that. I've been around a long time, and I shorted that failure business model way back in the early 2000s on that BCSI, and it's up $3 in the gap. Google, it's only a 2.16 ratio. So the pricing here, you better put the prices out. Right now, what I would do on this price here, I would put it out at $5.90. And if it fades back, I would put limit orders out to buy at $2.70 below the market. They have a limit order out in case there's a sell gap. Anyway, free market futures, a little bit of trade management. Learn how to work the pre-market. 6:08 a.m. Pacific Standard Time. We will give the SMF worldwide economic output. What does that mean? The output of each of these countries. How it will affect the S&P 500 moving forward in 2012. And why the S&P 500 would have a diminishing price action in earnings contraction in the 2012 SMF economic report. Don't miss that report. How do you get it? Well, get to know us. info@stockmarketfunding.com. That's how. On the other hand, I've got a gap. And these options on a Friday, here's your gap. That ratio is how they're going to price it. They need to have a higher ratio to get a higher markup in the calls. I'm concluding the pre-market 11/18/2011 pre-market, how to trade pre-market futures, how to plan a day out with worldwide economic events, systemic risk, the euro, and everything else that goes into play. The S&P 500 and all of the key indexes have had major reversals. If they break below that 1215, then we can go lower in the S&P below the neckline, which is 1200 on the S&P 500 index. Stay tuned on that. We update it every day, and I'm going to tell you right now, I'm coming down here in that FXE. And how to short that, you can see that there's not much volume, but you can see the 135.22s up here were some of the highs. And yes, it's got a gap. That's good for the bull side of the market. If it goes down in value, well, then it's good for the bear side of the market.